Traderstation, what's happening, guys? Here we have the Euro New Zealand dollar. Okay, I'm on the daily chart. We'll look at a few of these time frames. If you guys listen to our podcast on Sunday, which you guys should be listening to our podcast on Sunday, absolutely free on Mixlr.com. That is Mixlr.com. If you just search for Traderstation, the Traderstation podcast will come up. You can click that. Then you can go to the show reel items and you can listen to the podcasts. You can do that live, or if you can't make it live, you can play it back at your convenience. Anyways, to start it off, we all picked a pair. This was my pair for the week, so to speak, if you want to call it that. And mainly because of this trend line here that I really liked. And you can see this is point 1, point 2, and point 3. And usually we like to see point 1 and point 2 have the same spacing as point 2 and point 3, but this is trading. Nothing is perfect. Nonetheless, trend lines are very valid if you watch the price action around them. So, just relentless uptrend on the daily chart, and then we're getting into this, you call this a triangle, consolidation, whatever you want to call it. You guys know I'm not big with names. Technically, this is a triangle. I guess the bulls have the upside because the triangle is happening in an uptrend. So, you go with the trend. And, the weekly chart looks to be breaking out above this level. Pretty probably, as you can see, as soon as we got above this level here. Kind of did it with this bar, and this was some crazy news event. But nonetheless, you see the gaps holding. The gap is holding. We haven't even come back to test this, and with the trend line there, even with the weekly chart, overbought. We're overbought. We're not even close to the 10. We came close to the 10 EMA here, and the 10 EMA is a good moving average for like a strong trend. If it keeps obeying the 10, then it's a strong trend. And as you can see, we're more than obeying the 10. We could probably put up like an 8 or a 6 EMA, and we'd be obeying that too probably. But anyways, I really like that trend line. That's why I picked it. I really like 4-hour charts also. And you can see right here when we touched it the first time, it was a nice 2-bar reversal there, and then we moved our way up. So as we came down here, what I mentioned in the podcast was that sure, the bears are owning these bars. We keep getting consecutive bear bodies, but look at these bear bodies. There's no aggressiveness here. How strong are the bears in this area? We're getting a lot of tails. We're not really getting bars closing on their lows. The bears pretty much had a chance here. This was a nice, pin bar closing on its low here, and the bears really needed to close like below the trend line, okay, below the trend line, below these bars, and get some follow through if they wanted to create a sense of urgency by more bears to hop in, and to create a sense of fear by the bulls to say, okay, this is going down. But nonetheless, it looks like this trend line held up really well. As you can see, when we get below things, like we got below this bar here and we bought ourselves up, we got below this bar here and we bought ourselves up, we couldn't close below, and then finally we get below this bar here and we create that bull body. And this is what happens at trend lines. It can be very aggressive. You barely have a chance to think, so you really have to be ready. And on the podcast, I alerted you guys that I'm pretty sure I'm not pretty sure. I alerted you guys that the bears are looking weak, they're not looking strong, and I'm going to watch how we react around this trend line, and I'm going to watch the price action and look to get long. So this is the 4-hour chart. It's up to you whether you want to get long on a touch of the trend line or wait for some type of bullish confirmation, whatever that might be, whether you're just looking for a bull body or something. Just be aware, the more confirmation you're looking for, the more probable that you will be correct but you know, with a higher probability comes a lower reward. So yeah, you can wait till this, but if you did wait until here, you know, you're talking buying around 76, when if you had bought on a touch, you'd be buying around 75. That's all your preference and how you want to handle it. Let's just go down to the 1 hour if we want to see a little quicker as to how the price action is reacting. And you can see we almost even touched it here, so maybe some people got long in this area, and that's fine. We start going below it, and if you're looking on the 1 hour for a breakout, yeah, we're getting a close below the trend line with this bar, but it's not as low. We are getting closes below here, but then again, look at that follow through. Pretty crappy follow through. So you need all the characteristics to be there. Right here, it's a nice tug of war between the bulls and the bears. Who's gonna win? Again, we get below here, and look, we got buyers buying below this level. We bought it up. We could not close below this level. We closed up here, and then we start generating those bull body. Not a great bar for the bears, and then it looks like this trend line is acting as good support here. So, you know, whatever you want to wait for and however you want to dissect the price action, we can help you with that, and we can help you with should you wait for confirmation or should you just buy on the touch or enter on the touch. You know, selling on the touch if the trend line is down, just selling on the touch. And there's no right or wrong answer. It's just really what type of trader do you want to be, knowing your strategy, knowing your rules, and knowing when your strategy is telling you to get out or to stay in. Now, what we're seeing on this 1 hour chart is a lot of congestion in this whole area, right? So let's just get, you know, all of this is lots of congestion, this whole area right here. And with this bar right here, we look to be breaking on top of all of this congestion. You know, I view this tail, these very, very long tails like that, you know, you can see we traded up here and then we just got brought back into the range and closed here. I kind of view that as an outlier, so I'm really looking to see how we close above this rather than how we close above this, because I do think this is an outlier of price. And you know, the main congestion is all of this stuff, all of this area. You know what happens when we get above here, you know, and then what happens when we get above here and above here. And we got that nice bull body. We even got some follow through, and this follow through ended up closing on top of these bars. So anyone that sold in here is now holding a losing position as of the close of this bar. You know, we're getting consecutive bull bodies, and then we even got that follow through. And yes, you'll say, well, the bull bodies got smaller, and they did. So that is decreased selling pressure, decreased buying pressure, I'm sorry. But nonetheless, the context is great. You know, in the podcast, I said our first level when we bounce up from this is the middle of this range right here. And the middle of the range is around like 77.50. As you can see, we're trading at 77.87 as of you know, 5:40 p.m. Eastern time on Monday. So for all you people out in London, it's about 10:40 p.m. for you guys right now. But we got to the middle of the range. That's target 1, and the next target is up here in this 180 area, right? So let's just break down what's going on a little bit more. And we're getting the breakout over this, and we're creating the gaps. See, you want to talk about this as the breakout bar? You can talk about this as the breakout bar, and you can clearly see gaps here. But look, this is the breakout bar. Look at the high of this bar right here and the low of this bar right here. And you can see they don't overlap in price. Bulls are protecting this price level for some odd reason. And I think that odd reason is because we are factoring in some type of a measured move. And as I've said, I like to touch as many things as possible with my measured moves. So maybe I can touch this bar, and then I'll be touching all of these bodies if I started here. And I'll put the 50% mark at that gap, And you know, voila, what do you know, it takes us to the top of the range at 178.89. That's me being conservative. So 179, 180 area is definitely the next step for this chart, in my personal humble opinion. And then, you know, up to once we get there, it's you know, we're going to try to break out, but we're definitely going to have some troubles. Now this looks good. This is the 4-hour chart. Yeah, the bodies are getting smaller, so we might have to pull back a little bit, but we do still have those gaps open. Maybe this 50 right here, 50 EMA, will act as, you know, some support if we pull back. And I just think we're headed to the top of the range. You know, I thought that down here. I thought the middle of the range was target 1, and the top of the range is target 2, and then target 3 would be a breakout over the whole range. So we look at the daily chart, right? And you know, if we wanna, where do we start the measured move? If we're breaking out of all this consolidation area, it's like, where do we start it? Well, one place is the bounce from this trend line, and we'll put the 50% mark at the top of the range there. So we start it here, 50% mark right here. If we break out over this, and that takes us to 1.8, you know, 1.850 area. So that is definitely you know, one possibility for bulls that are buying here and expecting to hold, you know, for the breakout on top of this range. The more times something bangs against something, so we keep banging around this 180 area, and what happens is bears keep selling here, and they had to sell a little bit higher here, and they had to sell a little bit higher here. So eventually the bears will reach their max position. You know, they'll, whatever, we'll say it in our terms, because these institutions are definitely buying more than 10,000 units, but you know, I mean, buying or selling more than 10,000 units, but they sell 10,000 units here, and then they sell another 10,000, and then they sell another 10,000, and then they sell another 10,000, and over here they're gonna sell another 10,000, and pretty soon they're gonna reach their max position, where they're saying, all right, like, I'm already at 50,000 units, I can't go any more than that. When for them it's probably more like, you know, 50 million units, but you guys get what I'm trying to say here. And once they reach their max position, they can't sell anymore. So if they can't sell anymore, all that leaves is, you know, buyers. And on the same token, buyers are doing the same thing. They're buying 10,000 here, and then they're buying another 10,000, buying another 10,000, and then buying another 10,000. And they're just trying to create the breakout. And once it gets up here, they're also probably buying, you know, 5,000, buying small, hoping other institutions are joining them and trying to create this breakout, because we keep banging on this 180 level. So even if they buy here, yeah, they could be taking some profits over here, whatever they're doing, but there are certainly institutions betting that we're just going to break out of this. Remember, this is technically a triangle, for all you people that love those names that describe nothing about what the price action is doing. But anyways, this is a triangle, and a triangle in an uptrend gives the favor to the trend. So the favorite here is the bulls. You know, what is it, 55% to 45%, you know, in favor of the bulls, 60% to 40% in favor of the bulls, whatever it is. You know, and I do believe that, yeah, it is slightly bullish, but you know, 53 to 47%, and you know, pretty much anything can happen. But my whole point here with this rant and this spiel is that there are certainly bulls betting on the breakout, and it's a matter of where does that measured move start. Other measured moves will start there, and this takes us to 1.8696, so 1.87 area, and no coincidence that is the top of this outlier tail here. Certainly an outlier, but you know, price got here once, it certainly wants to get there again. Look at the monthly chart, see if I'm missing anything. You know, monthly chart just kind of looks like it's trying to turn itself around into a bull trend. You see the bulls largely controlling every single bar. Finally, I think we saw this gap on the weekly chart. Yeah, this is the same gap that we saw on the weekly chart. We broke above this, and as you can see, you know, price came back to touch it with the trend line, and bulls protected the price. So I'm pretty bullish on this chart, you know, and I just want to see how the price action reacts when it gets to the top of the range, you know. And it's tough. Once you start getting to the top of the range, you can see how quickly it turns back down, especially on the higher time frame charts. Here's the 4-hour chart. It turns down pretty quickly from the top of the range as it turns up pretty quickly from the bottom of the range. Same thing on the daily chart. It turns down very quickly from the top of the range, and it turns up very quickly from the bottom of the range. So, like, if you're a daily chart buyer and you're waiting to buy on top of bull bars, well, you've already missed half of the move here if you're waiting for this bull bar to form. So that's why in situations like this, you know, maybe coming down to the 1-hour chart and just kind of seeing like, alright, we're getting above here, but we're generating tails. We're not getting bars closing on their highs. We're not getting good follow through. Again, we got above this bar. They sold it again. You know, that's all like, that's all bears coming in and stopping the bulls from breaking out. Oh, look, we're getting above this. This is great for the bulls, but look at that crappy follow through. You know, not closing on our highs, creating a lower high, so to speak, and you know, bear bars. And this classic pin bar reversal, whatever crap that you guys like to look for. I'm sorry, I don't mean to completely bash those names. I know all the names, I know all the triangles and the wedges and the patterns, but I just think it's funny when people, you know, go out there and they sell every pin bar or something like that. Like, there's so much more to trading than that. Nonetheless, this is one of those pin bars, inverted hammers, whatever the heck you want to call it. And my whole point is, it just, even on the 1 hour, it happens kind of quickly. But the 1 hour gives you a little, you know, quicker decisions. You can make quicker decisions with the 1 hour because you can see them selling on top of bars so easily. You can see all of these tails. Look, did we get above this? Yeah, we got above this, and look, sellers coming to sell it down. So you can look on the 1 hour. Once you get to the top of the trading range, same thing here. I got above it, sold it down. Looks like a perfect double top with this one. You know, oh, such a strong bull body closing above this, you know, but look at the follow through. So once it does get to the top of the range, if and when it does get to the top of the range, same thing here, got above these bars with this, and we sold it down. If and when we do get to the 79 area, I will certainly be watching this 1 hour chart to see how it's reacting, but as of now, I believe this measured move is taking us up here to the 79 area, and it will be exciting to see if the bulls can get that breakout that they oh so desire so much over all of this. Alright guys, thank you for listening to Traderstation. Please send me emails. Consider the Skype and mentorship program so we can find the style that works for you. And please, please, please listen to the podcast. We have so many cool things in store for the podcast, and we can't wait to bring them to you. So thanks a lot, Traderstation, and until the next video.